is Commodity Wrap on Tony St. James on a Wednesday. We're officially halfway through the trading week. And don't normally say that at the end of a Wednesday because usually it's a 5-day trading week, but holiday shortened week, and I'd like to say maybe it was really interesting, but kind of look at the trade, and it's been, well, I can't remember who said it earlier this morning, like, watching paint dry in some of these markets. Brian Hoops is with us, though. Brian always makes it interesting. Brian is president, Midwest Market Solutions. Hey, Brian, before we jump in and start really talking about markets, we see you on TV and we hear you on the radio once a week. But for those who don't know your background and how you ended up with Midwest Market Solutions, what's that pathway look like? Did it start on a farm?
Yeah, absolutely did, in northwest Iowa, where my parents farmed. So I grew up there, and that was back in the days where it was a little bit more labor intensive than it is today. So learned how to drive tractors and back wagons and do all kinds of fun things on the farm, and really taught you a lot about honesty and hard work and how crops grow and animals, how you take care of them. So very invaluable to what we're doing today. But yeah, great background upbringing. I thought I didn't really appreciate it at the time, but I certainly do now.
And that's kind of how things work. A lot of times we can't appreciate where we are and what we're doing until maybe a little further down the road. What about Midwest Market Solutions? Tell us about that.
Yeah, so that started in 2022. So about 23 years ago, I started that. I had, after college, had worked in banking and farm management for a number of years. And after that, got involved with a local commodity office, and after a couple of years, started on my own and opened that office in Sioux City, Iowa. Was the first place I had the office. And then from there, we had offices opened in Yankton, South Dakota, where I worked and lived for a number of years. And we had, still have 4 guys working out of that office. But since then, we've also been able to open a few more branches and take on a few existing branches, buy some businesses that were going out of business. But over that time, we've, hired some guys right out of college, and they're still with us over 20 years later. So we have a lot of experience with our crew, covering 5 states: in Missouri, South Dakota, North Dakota, Iowa, and Minnesota is where we have our branch offices located. And several some of those people have the farm background as well, where they grew up on and either farm today or had a farm background much like I had back in the day.
We started our conversation earlier this morning on TV talking about USDA's Crop Progress Report, which came out yesterday, and I thought it was kind of interesting. Looking at the good to excellent number, and when you look back over the last 10 years, it was actually the 3rd lowest number in the last 10 years. It wasn't the lowest number for good to excellent, so I guess there's the positive side of it. But the market finished in the red on Wednesday. What's really happening in that corn market?
Yeah, it's always hard, that first rating of the season. It's really hard to get a gauge on nationwide numbers. Now, going forward, we'll have a much better and more accurate numbers from week to week. Still probably will miss it by 1 or 2, 3 percentage points, but not a big swing and a miss like the corn did, or even a bigger one like spring wheat did, where ratings were not even close to what the average trade guess was. So, I thought last night after seeing those numbers, okay, so they're not as good as what the trade had expected. Could give us a little bit of a bounce in the overnight session. But if you look at that weather forecast, it's going to allow next week's progress numbers to improve, and that's what we're trading, is always looking ahead on a week or so ahead. Those crop ratings should come up for spring wheat, should come up for the corn market as well. because of improving weather forecasts. It's going to get a little bit warmer. Some areas that haven't planted corn will dry out enough to get corn planted, and that's what the market focuses on, and that's, I think, why we ended lower today, is that improving weather. You noticed it really in the soybean market. We saw a lot of selling coming into that market, and as far as spring wheat goes, that's the lowest rating in 37 years for that crop. And that market did lead us to the upside, but not a runaway, only about 7 cents higher. Winter wheat contracts, a couple cent gains as ratings were down from last week. And so it's again, what's going to happen next week that's going to be the most important.
Yeah, and again, corn in the red to finish the session on Wednesday. That's now 4 sessions lower. Soybeans lower, soy meal lower, soy oil lower. All 3 wheat exchanges breaking that 3-day losing streak and moving higher, and the cotton market moving lower. We'll come back and pick up the conversation with Brian Hoops of Midwest Market Solutions. This is Commodity Wrap. This is Commodity Wrap. Special guest today is Brian Hoops. Brian is president of Midwest Market Solutions. Brian, we started our conversation, a little background about you and Midwest Market Solutions, kind of worked our way into that crop progress report. And you mentioned wheat breaking a 3-day losing streak. And at first it was just spring wheat, but kind of pulled hard red in Chicago with it. Is there more room still to move higher here, especially for Chicago and the hard red, with now really new crop being the front month?
Yeah, it's going to be hard, I think, to really get much upside in here. We've gone through a lot of the spring redevelopment time frame for that wheat market without really any crop problems. Here in our area, we're in Springfield, southern part of Missouri, south central. We had almost 11 inches of rain in the last 5 days, so this crop is really benefiting from that. So it's going to be really hard, I think, to see any type of a crop stress at this point, because we're just kind of running out of time. Texas is harvesting a lot of crop, and that it certainly can't be hurt. We're hearing good yields, good test weights out of Texas. I think it's going to be a real difficult challenge for wheat to have any type of a rally until we get to post-harvest time frame, or maybe a post-harvest rally. We can see the market have a recovery, but anytime before that is going to struggle. Just anticipation this crop is good, we're going to have big yields, is going to put a cap on our rally attempts.
Okay, let's kind of move here from wheat to livestock futures. Live and feeder cattle both settling in the red on Wednesday, and so just looking back, we were lower on Tuesday. We didn't trade on Monday. Go back to Friday, and we were mixed in the live cattle market. Are we starting to develop a trend here?
Yeah, we were down the last couple of days here in this cattle market. Of course, we had the false rumors that the screwworm was found in Missouri, and that really set us under some pressure. But it's kind of made the market jittery, made it a little bit nervous in here, and that is going to keep us from trying to rally much. I think we're going to stay under a little bit of pressure here, a little bit of technical correction. But again, we are heavily discounted to the current cash markets. I don't think these cash markets are coming down anytime soon. It's going to limit how far we fall, especially the June contract as we get closer to the delivery period. But all these other contract months, October's at 206, August is just over 208. They're heavily discounted. You're not going to find much selling pressure in those months because producers don't want to sell at a loss.
I read something kind of interesting. Get your take on this. A website called agcenter.com, and it's run by some in the beef industry in the Texas Panhandle. And in their commentary, they just suggested that the discount in deferred contracts is pricing a plant closure in. Now, nothing this isn't a rumor or anything. They just said based upon what they've seen in the past and being pretty close to ground zero of that plant closing over 10 years ago in the Texas Panhandle, just said you might want to keep an eye on this. Is that something you could see, if not a plant closure, at least where we see maybe some packers looking at starting to shorten their kill weeks?
Yeah, we've heard some rumors about some packers closing some plants. Maybe it's partly because due to age, but also because they are having a tough time making money right now. We've noted for most of this year that they've been killing in the red, losing money on every animal that they kill. So there is very likely that we're going to see not only slow down in the kills, but also maybe a plant or two closing or shuttering some hours until they get those margins back in their favor. So it's something that we've been hearing talk about that I think will probably end up happening here sooner rather than later, especially if that plant is a little bit older.
Let's work in our conversation here, the hog trade. And hogs have had a great run this year with gains of over 22% year to date, settling higher on the trade on Wednesday. That's 2 consecutive days higher after having 4 days in the red. What's happening in the hog sector?
Well, really not a lot of news. We're more in like a trading range, like the June contract, the front month between 97 and 101. We've been trading in that range for well over a month, and I don't suspect we're going to break out of it one way or the other. There's enough pork supplies to keep our rallies in check. Demand has been just good enough that if we could reach some sort of agreement with China to take more of our pork products, or even another country, we could break above that trading range and push the summer months into even higher territory, maybe 104 to 108. But there doesn't appear to be a tremendous amount of downside risk. I don't think we're going to see these summer months break off and head below $90 anytime soon either.
Okay, we've covered a lot of ground here. Final thoughts before we hang up our conversation on any outside markets we need to keep an eye on?
Well, certainly the stock market is something everybody's keeping an eye on. We have a little bit of a down day today for the most part in the stock market, but it acts like it wants to move higher, especially if we get some trade agreements in place. Crude oil is another market that during the summer months we normally move higher during this time of year. But again, OPEC is increasing production. Until we get some agreements with China or some other country to buy our products, I think their top end is very limited through the summer growing season, and likely to see prices work their way lower after the summer driving demand season starts to fade later on this summer.
Okay, if we want to keep up with you in Midwest Market Solutions, can we find you online?
You can find us on the web at MidwestMarketSolutions.com. Find a list of all of our offices. Or you can call me directly. The number is 417-501-5132.
He is the president of Midwest Market Solutions. It's Brian Hoobs.